In this video, I'll be showing you what you are doing wrong and what you need to do in order to cut off your loss. The first thing is, perhaps number one thing is, you are trading against the trend. One of the things that causes loss most often is going contrary against the direction of the price. So it is possible that what you are trading is not in line with the trend of the market per time. For instance, this is volatility 75, and if you look at this volatility 75, price is below the middle Bollinger Band. If you are conversant with our strategy, whenever price is below the middle Bollinger Band, we establish that we are in a downtrend, and as such, we will only be looking for opportunity to sell. So anytime price is below the middle Bollinger Band and you want to force a buying trade, believe you me, you may end up in a loss. And if you continuously be doing that, you'll be incurring more loss. Why? Because you are not a market maker and you cannot determine the direction of the market. So all you need to do is identify the flow of the market and follow it in that same direction. So avoid trading against the trend. And it is as simple that price is below the middle Bollinger Band, so you can easily find your entry. Number two is, avoid looking for reversal. It is very important that you avoid looking for reversal trade. The place of reversal is always the place of manipulation. What that means is that any zones price reverses from are 80% the zones of manipulation. So that is why it is important for you to watch out for always the direction of the trend. What that implies is that, first of all, allow the price to give you a clear direction. For instance, look at this price. Price has been below the middle Bollinger Band, and this is a downtrend. So what will I do? I'll look for my point of interest. Here is my order block. So I will mark out this particular order block. You see, that's as simple. I remember we say, what is it that defines a valid order block? First, we say we want to see a liquidity sweep. So this particular order block, take away the liquidity that was sitting here. There is a liquidity here. So this order block that went up, take away this liquidity. There is this low previously. It takes away this liquidity. So this is a valid order block. So what that implies is, price took away this liquidity, and look at what happened. Price now pulled back into this order block. So it's as simple, you go to your 1 hour and then you validate your entry. So this is your 1 hour, and then you can see your candlestick formation that gave us that beautiful entry. And there's as well a divergence confirmation. And you can see all from that time price has been selling. But let me show you something else. This is what I mean by forcing a reversal. Now, do you know when price left this zone and went to the upside, automatically this zone becomes like a support zone, right? Yeah, this particular zone becomes your zone of support. So when price came to this zone here, look at it very well, price pulled back to this zone. And if you observe it critically, when price pulled back to this zone, you realize that we have this bullish candle inside of this zone. So in your mind, and look at our CCI. So in your mind, you can conclude that this bullish candle is a buying signal. Whereas there is a liquidity sitting here that market want to manipulate people into. So you will now buy because you saw this bullish candle and thinking it's a buy, and then price will slide down to take away all of this liquidity, and it will continue to the downside. And that is why I said looking for reversal most often is the area of manipulation. So follow the trend. Do not anticipate reversal. I repeat again, as a trader, avoid reversal anticipation. You are not the market maker. Do not think of when price will reverse. Rather, focus on what you are seeing. So you can see how that plays out beautifully well, and price keep pulling to the downside. So this is one of the easiest way you can enjoy your trading. Avoid anticipating reversal. Avoid going against the trend, because if you continue anticipating reversal, this price will continue to take you out repeatedly. Another thing you need to learn is master chart pattern. Master your chart pattern. Master your chart pattern in the sense that if you look at this particular candlestick, you can see how this particular chart pattern plays out. This is a bullish flag pattern, and immediately it begins to form. You wait for price to break out of it, retest, and you are good to proceed with your trade. Alright, so understanding this concept is very, very important as far as trading is concerned. The number 2 is anytime you want to make your entry, always ensure that CCI is at the level of 90 to 80 in a situation you want to sell. Or let CCI pull to 50 and then curve back to the downside. Then you make your entry. Please never underestimate the power of the CCI. And like in this case, let me take you to 1 hour and show you something. Now you can see what I was saying. Look at this CCI, it pulled back here and then it comes to this level. So which means that somewhere here, you should have made that particular entry. The one key thing I want you to pay attention to, and one secret is, anytime you see price close to the lower Bollinger Band, and there is no support zone there, or resistance for upper Bollinger Band, it is going to sell. Because there are times when this lower Bollinger Band, they attract price. And that is because they will attract price until price get to the major zone, especially H1 all the way to 1 minute time frame. These are hidden secrets of how this works that I am sharing with you. It is not a regular way of trading, but these things are provable and they are working. So remember our checklist, it has not changed. Identify the trend of the market. Once you have identified your trend, mark out your order block. Okay? And look at this. This is another block. Do you see that? As simple as it looks, this is an order block. And let me show you the validity of it. You can see this. This high here, this is a liquidity sweep. So this is how easy. And then look at, we say the valid order block sweep liquidity sweep. Look at this zone, this bottom, this is a liquidity. Look at this candle, it sweep liquidity. And then look at price pull back into it this way. So every valid order block, valid support, valid resistance, always watch out for the zone of liquidity sweep. Once you get that this particular order block has taken liquidity, it is a valid zone. 70 to 80% of price reaction in these zones are valid and they always place out. You can go backtest this that I'm sharing with you and you will see how effective your trade are. So one of the reasons your trade failed, and what I need you to do now is for you to look for a valid zone for you to be trading from. So it is not every other block you see you trade. It is not every support and resistance zone you see that you trade. Look for a valid ones that take liquidity. Then number 2, pay attention to how price leave that zone. Whatever is not clear to your eyes is not it. Any zone you are thinking about, any zone you are contemplating about, whether it is a real zone and it is not obvious to the eye, that is not a valid zone for you to trade. Remember, you are not the only person trading in this market. So you should be trading where it is obvious for every other trader to trade. That is why it is dangerous for you to begin to anticipate price reversal. If you are watching this video to this time, thank you. And we are going to continue in the subsequent video. This is not the end of it. Now we have a trade entry here. This is 30 minutes and this is a bullish flag pattern. You can see if you are conversant, this is our flag, this is a bullish flag pattern, and this is a buy entry. I gave this signal sometimes last night. We are in a new day now on how we can look out for breakout. So price has break out of this flag already, and I will be executing my buy trade. So that is it. So I have my trade executed, and this is based on the flag pattern. A bullish flag pattern is a continuation pattern. So we will be continuing this video in the subsequent videos, this particular lesson in the video to come. So thank you for watching. Do not forget to give this video a like. Please share, subscribe, support this channel by subscribing, like the video, comment, and turn on your notification bell so you'll be the first to get notified or upload our next video.